We are live. Okay, perfect.
You made it.
Happy Wednesday, everybody. Hump day. It's hump day. And I almost didn't say it. It's hump day. Welcome to Go FUD Yourself. Today is actually a pretty big milestone. Episode 40, I think. It's not in the title.
It's not in the title, but it is episode 40. I can't believe you remembered. Oh my God.
First time ever. It's kind of like remembering an anniversary, I think, right? No? Some people do, some people don't. But when you do, everybody's.
It's also a really big milestone in crypto land. I almost said cryptoverse, which we hated ourselves for yesterday.
Yeah.
Today is Shapella. Today is the ETH Shanghai Shapella. It's time we're going to talk about that. We're also going to talk about CoinBase and the insider trading case. It's pretty interesting. I have some things to say about it, but I'm sure you'll have more. And then we're talking long term. This is like our FUD component. There are a lot of really funny articles coming out that are like the balkanization of crypto. Crypto was dead in America, so on and so forth. We talked about this a little bit yesterday, but it deserves a little bit longer. You ready?
Let's do it. All right, welcome back. Quick shout out, Chainlink. I love the Chainlink merch, always best items. It's soft, it's nicely cut and fitted. Love it. So thanks, Chainlink. Official merch sponsor for today. They also did my hair and makeup, if you can tell. So thanks, Chainlink. Anyways, all right. Kiara's getting rugged again, it seems.
I'm wearing my Battles shirt, which I got at a Primus Battles concert in DC when I went to the Government Blockchain Association. It's like crypto merch, but at a distance.
Yeah, it's arm's length crypto merch. You got it while doing crypto business, but from a non-crypto company. Awesome. Okay, so we're good. We're gonna move on from that, but just a shout out to Chainlink. You can send me more merch anytime. And happy to wrap it again. Okay, where are we starting? First one is what?
First one, we have the first ever crypto insider trading case. Isn't it exciting? So basically what happened is April 12th, 2022. This guy named Wahi was a product manager, product owner at CoinBase, and he gave some hot tips. People went and purchased a lot of tokens that weren't yet listed on Coinbase so that they would profit when it was listed on Coinbase. Someone, a big Twitter account, noticed and posted about it. So this was drawing attention to Coinbase, and they immediately gave him over to authorities during their investigation. What's really interesting about this is that yesterday Coinbase won.
Yeah, this whole situation is interesting. Kobe was the influencer, crypto Twitter influencer.
I couldn't find that. Okay.
Yeah, it was Kobe, and so as a consequence, everybody, it's really caused probably some pain for Kobe now because the references to him being a Fed are plentiful and consistent. Obviously, I don't believe he's a Fed. I think he was just looking at this going, whoa, wait a second. And I mean, at the end of the day, I think all of us have a genuine interest in fairness, right? Like, I mean, there's already asymmetry in access to data and data speeds and algorithmic sophistication for some traders, but at the very least, public news or announcements that will drive momentum and drive volatility should be as much a surprise to us as to any other institution as users. And in this particular case, historically, there's been a lot of hype around listings on major centralized exchanges. For some reason, it creates a different liquidity dynamic. It's generally a validation of, to a certain extent, of a certain product's level of success or whatever due diligence from the centralized exchange. So what happened here was that they were leaning into it. There was somebody at Coinbase. This is like the worst kept secret ever, too. Like, so many people knew about this, but even when we got listed on Coinbase for Benki, I mean, we saw a magical run up. We didn't even know when we were getting actually didn't know until it happened. And literally, like, we didn't know 10 minutes before or 1 minute before. We didn't know when it was happening, but we had a whole bunch of volume leading into it. So, I mean, we didn't think anything of it at the time. In hindsight, who knows? Anyways, this is interesting because Coinbase all along has said, hey, like this is one rogue actor. This is not obviously our standard operating procedure. So that's where this lawsuit came from. And I think, 470K is a lot for an individual, I think. But
well, that 470K is actually the second charge. He was originally fined over $800,000 and spent, I believe, 10 months in jail. So it's been a rough year for that person.
Nikhil Wahi. Yeah, that sucks.
And their own brother testified against them. It's actually super dramatic. I hope one day it's a Netflix special. But to try to reduce the FUD around it, I did also take a look at the actual justice.gov case just to make sure that we weren't misreporting, there was no misinformation, that kind of thing. And it's exactly as you would expect insider trading to be. I remember first learning about insider trading when Martha Stewart went to jail.
Yeah.
Because I was still a kid, and
not to date yourself or anything, but
yeah, but I was still a kid, and that was the first time that I learned about insider trading. And I remember asking my parents, this is not, I don't insider trade, but I remember asking my parents what it was, and they were like, okay, well, you have business knowledge, and so you make an investment so that you can make money. And I was like, yeah, that's what business is. And so I can see from a very childhood eyes, I can see how you would get caught in this trap thinking that you're doing something good for your family. You're just trying to make sure that everybody's financially stable. You're looking for that financial freedom. You're working in crypto. Everything's bullish. Everyone's hyped. Who's going to notice if we buy a few dozen tokens? But this is really setting the precedent that insider trading applies to crypto. And the Blockchain Association has actually come to lobby about it, and they have defended the Wahi family because that implies that things are secure.
In theory. So there's a lot of political maneuvering here, which is interesting. But I think at the end of the day, the challenge that people have, this Wahi guy, I'm sure, never in his life expected to be in this type of situation. I don't know him at all. But I would assume he's probably a fairly respectable person, generally speaking. I mean, he managed to get hired and have a fairly legitimate role at Coinbase, probably a smart person that's been around for quite some time. I don't know any of this, but I'm just making some assumptions to his benefit.
Well, and he admitted it. He wasn't guilty about it. Right.
Yeah. But I mean, the problem with these white collar crimes is that we don't feel the same amount of victimization unless you were in fact the person that got screwed. So when somebody gets mugged or murdered or something in this, in the neighborhood you live in, you're all somewhat indirectly impacted by that. Then you're more concerned about your safety and all of these things. And insider trading is a weird one because it's not a victimless crime. There, in fact, is a victim. And what makes it, what victimizes people is that these people buy before the announcement. Everybody else buys after the announcement. And these guys have already made a good run up of profit, and they dump on all those people. So all those people end up losing money in the short term, assuming that the project doesn't go up after the fact, which it didn't in 2022. Everything went perpetually down. So all these people now potentially are bag holders of some of these projects. Now, hopefully the majority of the projects listed on Coinbase will survive. And these people will have some redemption, but it still sucks.
The articles are actually calling, and the court case called Coinbase the victim. And I thought that was a strange way to frame it. I thought you might have some commentary on that.
Yeah. So Coinbase is the victim from a reputational perspective, right? So this is a very tough one to prove in either direction. How do you prove guilt or innocence on behalf of Coinbase here? Obviously, they didn't have enough evidence to prove that Coinbase executives meaningfully knew that this was going on and endorsed it, obviously. Even if that was the case, which I don't think it is, there's no record of it, obviously. So it's hard to prove guilt. It's also hard to prove innocence, because how often are you thinking that someone might be doing something nefarious that you just don't know about and acting accordingly and having records of everything that you've ever said and done? I mean, these are always kind of these super clear in hindsight moments for corporations. That's why there's litigation in capitalism, is to, smack people back into alignment, so to speak. Anyways, why is Coinbase the victim here? Reputational. That's what they're claiming. That's some lawyering, of course, to make them sound like the victim. Again, there's kind of this parallel narrative that you touched on about the fact that insider trading is a securities law. So what they're assuming, what they've had to assume, is that a certain subset of these tokens that were listed on Coinbase, they also deem as securities, which Coinbase clearly doesn't. So they have no choice but to say that we oppose this wholeheartedly, because if they don't, then what they're saying is, okay, well, we have what is likely considered registered securities that are now tradable on our platform, and we're not a registered securities exchange. So that, like, just because they're saying that doesn't necessarily mean that they, that in fact is the end goal. It's just there's no other way for them to approach it as Coinbase. They have to be the victim. They have to disagree with the characterization of securities, of course, which, at least currently we all kind of do, at least currently, until there's different regulations that are proposed. So I don't know. This is an interesting one. I think these are the types of wins that the regulators, I think, are actually looking for. They're trying to, you get a couple of people like this that get somewhat slapped on the wrist. And it's unfortunate that the first person probably got into this situation unknowingly, or at least they maybe knew it was a little nefarious, but didn't know that it was like going to end up in jail time and massive fines. But now the rest of the market, especially in the US, has no choice but to acknowledge that, insider trading, whether we agree or not that it's a security, it's being prosecuted now in crypto. So be careful. Oh, I thought I lost you. I thought you got rugged again. You just got nice and quiet and still.
Yeah, it's been in and out.
All right, what do we got next? Let's talk about some good news.
Still here. Can't kill me yet. Shapella. Did you make a flower crown?
I didn't. No, I was going to try to.
I think Shapella sounds like.
I was going to do a Dave Chappelle impersonation, but I'm not going to go there. That would be someday down the road. This would be one of those videos that, if you take that out of context, would look really stupid. So I won't do it.
What, you want me to be or something like?
Yeah, like, not to mention that I wasn't born in the US, but neither was Obama, according to some people.
Yeah,
so,
well, that was what I was going to say.
But anyways.
Okay, Shapella is today. It is at 10:27 p.m. UTC, which I believe is 6:27 p.m. EST, which puts us at 3:27 p.m. PST. So if you are watching this now, lots of organizations are doing a live stream of the launch. To be honest, I don't know what that would look like because it's digital. It's not like there's a ribbon cutting. I don't know. Maybe you have some comments on that, but I was hoping that we could talk about this for the crypto curious and then for the crypto natives.
Yeah. So why is this? That's actually a really good segue. Why is this relevant? It's important because it's one of the most important pieces of the transition to proof of stake. Not the most important, but one of the most important. And that is, among other things in the update, the one that most people care about is now you can also redeem your delegations or your validation assets if you were supporting proof of stake. Before, it was locked indefinitely. And now they allow you to request withdrawals and so on from nodes.
So for the crypto curious, just bear with me here.
Yeah.
What does that mean? Why would people have bought something that they didn't know when it would be released? How did they end up there? And why are they excited about it now?
Yeah, that's a good question. It's not necessarily that they bought it for this reason alone. Like the vast majority of people validating ETH, this is an assumption on my part. I don't have data to back this up, but most likely, especially with any volume, were participants, holders, believers prior to proof of stake. Now, proof of stake is a different way. Instead of mining, which is very energy intensive and quite inefficient in many ways, proof of stake suggests that you could run a validator, and instead of mining to create some, difficulty and so on, so that everybody can't just mine every block, that there's, these complex equations that need to be solved. In this case, you just put up a certain amount of ETH, and then you get to validate a subset of transactions on behalf of the network. It's important because there's some yield associated with that. So, and it's actually one of the purest forms of real yield in crypto. It's a very fundamental component of building portfolios. So this is really exciting. It is really exciting. People would buy it because they needed a certain amount of commitment to make the transition. So there's some people that had to hold their breath and just commit to somewhat of an indefinite timeline. And the timeline was a lot longer than people expected. There was quite a few delays, of course. And so there's many people that may have hoped that they could have withdrew their assets during the bear market and couldn't. Now they can. And so I can't remember the exact number, and I'm sure it's changed since yesterday, but there was a fairly significant amount of assets that have preemptively requested withdrawal of the total amount of stake. And so that could mean a multitude of things. That could mean those people now are going to turn around and liquid stake, which will end up in the same place, but they have, more movable liquidity at the same time. It could mean that some of them have found themselves in some version of financial hardship and need to liquidate some of those assets. Who knows? There's a lot of speculation on what will happen. The point is that they're not going to unlock all those assets all at the same time on the same day. It's going to be a staged approach.
So just for everybody who's crypto curious and watching, if you're holding ETH on a centralized exchange like Coinbase, you don't need to worry about it. There's nothing that you need to do. You will continue to hold that ETH. Yeah. If you hold ETH on a decentralized exchange, from what I understand, you also don't need to do anything. You're good. But if you are operating an Ethereum node, then you do need to do something. And the details of what you need to do, genuinely, they have a great little table on the ETH Foundation blog. It's very straightforward. It doesn't look like it's going to be challenging for anybody who's operating a node. So this is a pretty low resistance upgrade.
Yeah, it's low resistance, but huge impact. They tested it on the testnet, obviously, and with minor hiccups, everything went well. So they're pretty confident that it'll be a smooth process here today. So I guess we'll find out. Again, there's a lot of speculation, but it is pretty exciting. Like, again, will more people stake now than before? Maybe. Run validators now than before? Maybe. I think a lot more people will liquid stake, because the relative risk of liquid staking on Ethereum now is substantially less, because there's a realistic timeline for arbitrageurs to take the opposing position. So if you need to get out of your what is it? What is the Lido version? LS ETH, I guess, or L ETH, or whatever it is. Just using Lido as the example. I mean, if you liquid stake on Lido, one of the challenges has been, if you want to sell your LS ETH, someone has to buy it. There's got to be a counterparty, and the person buying it is, up till now, wants to buy it at a pretty significant discount because of the uncertainty of when they could withdraw it down the road, and that discount is their profit. Well, now that whole system becomes orders of magnitude more efficient, because there's meaningful clarity on when those arbitrageurs can recapture their investment and their upside from being the arbitrageur. And so it's a very exciting upgrade in a lot of ways for capital efficiency on Ethereum, for the transition to proof of stake, of course, from mining, for a whole multitude of efficiencies in how the blockchain works and runs, and its capacity and capabilities. So it's very exciting. I mean, we've talked about this a few times, but you got to give the Ethereum Foundation credit and core contributors a hell of a lot of credit, because this is essentially the equivalent of rebuilding a plane while it's in the air flying, which is pretty crazy. There's so many things that have to be considered, and one of the main advantages of blockchain technology is composability, and how all of these things kind of flow together and work together. But there's so many interdependencies in a composable world that one small break can have catastrophic kind of ripple effects to the other ecosystem. So you got to give them a hell of a lot of credit, honestly, for being able to pull this off. And to me, that's reassuring for the future of the space. So
one of the things we touched on yesterday was that this particular upgrade is going to draw in more institutional staking. Is that conjecture? Is that a thing that's been promised by institutions? Why do people think that would happen?
No, I don't necessarily know if it's something that's been promised by institutions. I would say there's probably some agreements in principle, or some people have expressed interest. Oh, well, once there's a meaningful withdrawal program, then maybe we'll consider it as an institution. A lot of it's conjecture. I think it does make it easier from an institutional perspective, because it's very difficult to assess the risk of an uncertain timeline. And so although, again, if they're liquid staking, there is always an avenue to get out. You're going to get out you're selling at a discount, so you're losing money. And so you can get out, but it's not necessarily efficient. So in this particular case, you have a lot more predictability in managing that portfolio. So in theory, I think it's conjecture currently. I don't think there's like any crazy meaningful commitments that as soon as this turns on, JP Morgan is dumping $1 billion or 100 billion into ETH. Like I just don't think that's what's going to happen. But it definitely makes it a lot easier to structure entrance into the market, I guess, for certain institutions. So should be good. Net should be great.
This bridges perfectly into our final discussion, which is crypto in the long term. And I kept this nice and vague on purpose because I know that you have a lot of thoughts about crypto in the long term. But there's a couple things to address from the news, and then maybe a couple of things that we can address with our own personal theses. So, for example, I know that JD and I like to refer to crypto more as blockchain finance. The way that crypto and DeFi exists today will not exist in necessarily 10 years.
Yeah.
Especially when we think about institutions entering that space and what have you. But there's quite a few articles out right now about Arthur Hayes and about a few other thought leaders in finance and economics and what have you. And the big things that are happening are CBDCs, which we've talked about endlessly, the crypto arms race, taxes, regulation, and so on and so forth. But people are really worried that traditional banking is broken and they don't know where they fit in the revolution of finance. Right.
Yeah.
When we hear something like Asia's the first mover, we're going to see a balkanization of finance. Everyone's going to have their own CBDC. Like there's a lot of fear mongering. And I think a lot of people think about crypto today or tomorrow or the next bull run or how they might short something or what they want to hold. But we're not necessarily thinking about how it'll impact our lives long term.
Yeah. So there's the old adage. We always overestimate what we can accomplish in a year and underestimate what we can accomplish in 10 years. And I think that's sometimes especially in crypto, because things move so fast, we index towards the short term rather than the long term. We're all thinking about what's going to happen tomorrow, this week, next week. And the long term is hard to conceptualize. But I think we're not geniuses by saying Web3 will look way different in 10 years. I mean, any technological innovation curve is going to be orders of magnitude different in a decade, obviously. So I think we're not geniuses in saying that. I think we're just stating the obvious. But I've known Arthur for a while and have generally been a proponent of some of his concepts and ideas, although I think the timing is often off and the hyperbole is often a little bit overplayed, but that's influencers in general, that's PR in general. I think he's not wrong here in terms of, and there's actually some backstory to this, which I won't get to on this, but I don't think he's wrong here. I do think there is a much bigger banking crisis that's happening under the surface that is just not in everybody's consciousness yet. There's a lot of European countries that are calling mortgages, calling loans, a lot of banks that are not issuing any new loans. They're calling loans back from people that don't have the resources or the ability to pay them. It's creating an artificial housing crisis in some places because all of these houses have no choice but to be sold without a mortgage. And then there's a glut of supply and not that much demand because nobody can get a mortgage to buy the damn house. So it's creating some problems. Commercial real estate, one of the, they like to say unintended, but I think partially intended consequences of COVID was that the entire paradigm of office space and commercial real estate has changed. And the economy and the financial system has not adjusted to that. And so there's a lot of these massive hedge funds, venture capital funds, banks that own the debt on a lot of this commercial real estate because has historically been seen as a fairly safe asset class. All of a sudden, they're going to have to write that shit down to the point that they could own loans where the value of the real estate is significantly less than the loan itself. And that's based on, adjustments of rents. Like, I mean, we look at San Francisco, California, all of California, but specifically San Francisco. I mean, they've got near 50% vacancy in commercial real estate. Well, how could you possibly manage a financial system where it went from zero to hero that fast. And that's a systemic issue, not just in California, not just in San Francisco, it's everywhere. And so there's a lot of problems with the banking system. And as a consequence of that, I think I tend to agree with Arthur that there is a problem. How I think that problem will present and how soon, it might not be as soon as everybody thinks, but I think it's going to be sooner than we all hope. And will that, balkanize finance? Maybe. I think we have a significant headwind still, and that is, again, we talk about this every bloody episode, it feels like, but until there's some clarity around global regulation, it's we're in between a rock and a hard place, because I just don't think that there's public confidence in crypto as an unregulated or quasi-unregulated space. And until we have that, I just don't think we're going to see the inflows of cash that everybody's expecting. Yes, we'll probably see some more retail adoption and so on and so forth, but the real dollar values, family offices, private money managers, et cetera, the real assets are going to wait. And so chicken and egg, which comes first? I don't know. Banking crisis or crypto regulation? I guess we'll find out. You don't seem too enthused about this topic.
I just keep getting rugged, actually.
Oh. Yeah. All right. I was like, wow, she's let me ramble on for a long time here. This is weird. You are getting rugged, actually. Anyways, I think
I tried to keep it far from crypto arms race today.
Yeah, you did pretty good until this recent rugging. But one final thought on that. Arthur talks a lot about a greater focus maybe on BTC and ETH. I mean, you can't ignore that, obviously, that they're kind of the two assets that most likely have somewhat controlled volatility relative to everything else, and a large enough current market cap that they can be seen as a little bit more stable and secure, I suppose, as assets, but they are still highly volatile. So thinking that this is like a store of value or flight to safety to a highly volatile asset, to me, is that there's a bit of a disconnect there. So we're going to have to wait and see how that evolves. But we've seen, like, Ondo Finance is another platform, random shout out, that has done some pretty interesting things with on-chain treasuries. And I think they have 70 or 80 million in TVL already for that concept. So there will be some on-chain options, I guess. But again, it's a treasury on-chain is no different than a treasury off-chain, in the sense that you're still betting on the USD, and you're still betting on inflation being in check, and you're still betting on the government not printing money into oblivion and changing interest rates. So we'll see. We'll see what happens. I think Arthur's articles are beyond worth reading. Just my caution is just take everything a little bit with a grain of salt. He speaks in very definitive terms generally, where he feels strongly about something, which you appreciate. That's his conviction. He's convicted that that's going to happen. It doesn't mean it's true. So just take everything with a grain of salt. Very smart dude, incredibly smart guy, but no one's right all the time. So that's all. Word of caution.
They are really interesting articles, and the balkanization of finance is an interesting topic to think about too, aside from the crypto arms race, aside from CBDCs. Yeah. But the concept that USD isn't going to be the world reserve. Maybe we go back to gold. Maybe we go to Bitcoin, right? Things could go really in either direction. But that's why you're here. So think critically about these kinds of articles.
That's why you're watching. Go FUD yourself. And I think that puts us at time, my dear. So like, subscribe, smash those buttons, share, do all that shit, ask questions. Do we have any comments today? No? Nope. Not today. Not yet, anyways. So yeah, same place. We'll be here tomorrow, 12:30 Eastern. Go FUD yourself.
Go FUD yourself.